This could be the biggest tax dodge in history.
NVIDIA founder and CEO Jensen Huang.
Dominating the AI chip race.
Shares surging.
Record-breaking quarter. You kind of made this happen, so.
Thank you. This piece yesterday about Jensen Huang, and the Times called it an $8 billion tax dodge.
It's an intricate scheme that allows some of the wealthiest people in the world to avoid billions of dollars in taxes.
It would not be unheard of to have a billionaire have a team of estate planners.
Tax attorneys and lawyers and accountants to circumvent the estate tax.
And that's just one guy, one obscenely rich guy, doing what the super wealthy have been trying to do for decades. Not pay the estate tax.
Levied on Americans who transfer property to their heirs after their death.
So the estate tax is really a aristocracy prevention act.
It's a tax on the trust fund kid who gets the money.
Nepo baby heirs who simply won the lottery at birth.
But dodging taxes costs money, accountants, attorneys, and takes some time. So the elites have their sights set on one thing to make their life easier.
And I will also effectively eliminate the estate tax.
The last 30 years, there's been an all-out campaign funded by some of the wealthiest families in this country to undermine the estate tax.
And when money is power, the estate tax, and getting billionaires to actually pay it, might be the only way to prevent a full-on American oligarchy.
You have an administration with 13 billionaires.
The most talented cabinet ever assembled.
You have 800 billionaires in the United States with combined wealth over $7 trillion. Their wealth is escalating thanks to the current administration.
We could be looking at trillion-dollar fortunes within the next generation.
We're going to take you inside the intricate loopholes that Jensen Huang and the super wealthy exploit to skirt billions of dollars worth of taxes and uncover how to stop them.
The estate tax is over 100 years old. It was established in 1916. We were in what people call the first Gilded Age, this period of extraordinary concentrations of wealth and power.
Chuck Collins has been working for decades to defend the estate tax,
which is the only tax we have on inherited wealth in the United States at the national level. The people who levied the first estate taxes saw it puts a brake on concentrations of wealth and power.
But lately, it hasn't been working out so well.
They have weakened it and considerably debilitated it.
The gift and estate tax has a lifetime exemption. That is, the amount of money you can give while you're alive and can leave behind when you die without it being taxed. The 2017 Trump tax law doubled the limit, making even fewer super wealthy families subject to the tax. The exemption is now $13,990,000.
It's a tremendous savings, so thank you very much.
You know, if you have less than $14 million right now, you are not going to pay the estate tax. That's the minimum threshold. That's where the tax starts, or $28 million for a couple.
Think about that. $28 million. That's a lot of money, a lot more than the average household inheritance of $46,200.
The reality is the estate tax is exclusively paid by multimillionaires and billionaires when it's working well.
The planning for estate and gift tax avoidance is not only perfectly legal, it's not even considered aggressive anymore. It's just basic planning.
Bob Lord is a retired tax attorney. He knows a lot about getting around these loopholes.
I spent the bulk of my career practicing tax law, a lot of it doing tax avoidance planning for rich clients.
A perfect case study. The New York Times is reporting on Jensen Huang's various evasionary tactics.
The Times called it an $8 billion tax dodge.
Jensen Huang is the co-founder and CEO of NVIDIA.
Do you like my jacket?
The chip giant is one of the most valuable companies in the world.
God, I love NVIDIA.
And that made him one of the richest people in the world.
I think Mark is pretty buff. The guy's pretty jacked.
I mean, you too, man.
But all that wealth could mean a hefty tax bill down the line, unless you have a GRAT.
GRAT stands for Grantor Retained Annuity Trust.
If you're not a tax attorney, this might make no sense to you. All you need to know right now is that it's a complicated vehicle for avoiding estate tax. Bob's gonna explain.
The way it works is I put in the $100 million of stock into the trust for my kids.
That would make Bob the grantor, putting his assets into the trust. If he had just given his kids the stock, he would have faced up to 40% in gift and estate taxes. But by putting it in a trust, a middleman essentially, he dodges all of that.
And they have to pay me back. And they do have to pay a little bit of interest on the deferred purchase price.
That's the annuity part. It's a payment the trust has to make to cover the value of those assets over the period of the agreement, usually a couple of years.
But if the assets appreciate a lot, then they get to keep the leftovers after they've paid me. And there's no estate or gift tax to pay on that transfer of wealth. So let's say in 2 years it doubles in value. So they pay me $100 million and they keep $100 million. I win against the IRS. I transferred $100 million of wealth to my kids without paying any estate or gift tax.
That's a lot more than the $28 million lifetime exemption for couples that we talked about. How are they paying no gift or estate tax on that?
That's why they call it the zeroed out grad.
A good tax attorney will make it so that the assets and the payments back essentially cancel each other out. On paper, there's no gift here because it's been paid back.
Think about what Jensen Huang's assets consist of. It's mostly the stock of NVIDIA, which has been increasing like crazy over the last 5 or 6 years.
According to the Times, the Huang set up their grats in 2016, putting in about 3 million shares of NVIDIA, worth about $100 million at the time. They're worth more than $15 billion today, meaning that this one move saved them a whopping $6 billion in estate taxes.
If you were going to search for the perfect asset to use for a zeroed out grat, it would be NVIDIA stock.
And the grat is just one of the tactics Huang's used. The Times says he's potentially saved more than $1 billion in taxes by using an iDigit, another complicated trust vehicle, and another billion using a donor-advised fund. The Times pegs Huang's total dodge at $8 billion. Now let's be clear, this is not something normal people have access to. It's not even something normal people need to do. But it is common for the people who can afford to do it.
When ProPublica got hold of a bunch of taxpayer data for the richest Americans, they found that over 50% of the 100 richest Americans were visibly using these avoidance strategies. Now, it may be that all of them were using them. It just didn't show up in their tax data.
Bob's been trying to get Congress to take action.
Oh, the loopholes are easily closed. There are 2 or 3 bills floating in Congress already. One introduced by Senator Sanders, and more recently, Senators Warren and Wyden have introduced bills. They're easily closed, but it just hasn't happened.
And it probably won't with who's running the show now.
But the good news is that we're headed toward repeal.
The 2017 Trump tax cuts are coming to an end, and a big legislative fight is coming to decide what to do next. But at least one thing seems to definitely be on the chopping block.
And I will also effectively eliminate the estate tax.
There's a well-financed campaign of confusion to get people to oppose the estate tax.
Chuck has been tracking these efforts for decades.
The proponents of wholesale repeal have had almost a 10-year head start in terms of shaping the language and spinning the message.
They called it the death tax. They rebranded it.
We must repeal the death tax.
They got everybody to think they were going to have to pay the estate tax.
The government insists on taxing you even to die. All of that needs to stop.
It's a PR propaganda campaign to confuse people.
The truth is, the number of people subject to the tax is so small. For example, in 2022, about 3.2 million people died. Do you know how many taxable estates there were? 3,170. That's about 0.1%.
Back in 2001, 2002, their whole campaign was predicated on farmers.
The death tax is unfair to American farmers and American ranchers.
An investigative reporter, David K. Johnston, went out to Iowa, went to the Farm Belt, and said, show me one person who's lost their farm because of the estate tax. You know, they didn't find anybody because there wasn't anybody.
It is, to me, the most direct attack on the American dream that exists.
This is an all-American tax. We fought a revolution to not have to be subject to a king and a queen and an aristocracy.
So I think we've seen one very prominent example of how wealthy individuals will use these complicated estate rules to shield their wealth from taxation as it passes from one generation to the other.
Ben Ritz is the Vice President of Policy Development at the Progressive Policy Institute, and he's got an idea to finally crack down on these avoidance tactics.
Our proposal gets rid of a lot of those loopholes and games and says very clearly, we are taxing this money when it is received as income, whether that is to the trust or the heir.
The Progressive Policy Institute's proposal would replace the estate tax with an inheritance tax.
It lets us do it in a more progressive and fair way, and it focuses the point of taxation on the person who is actually benefiting from the money. The other big benefit of that is it's much harder to avoid.
Among other things, the proposal calls for lowering the lifetime exemption to $1 million, taxing inheritances as income with a surtax, and of course, it would deal with that GRAT loophole.
Why should they pay no tax on the income they get just by virtue of the luck of their birth, when somebody's paying much higher taxes on the money they earn through their own hard work?
So here we are in the second Gilded Age. You know, we are seeing the rise of an oligarch.
Wealth at some point becomes insignificant for the goods and services it can buy and becomes important only for the power it buys.
The power to own the media, the power to warp and capture our political system.
Take over, Elon, just take over.
And yet here we are talking about dismantling the estate tax, the one tax at the federal level that actually slows this concentration of wealth and power.
And it only looks like it's going to get worse. Oxfam calculates that 36% of billionaire wealth is now inherited, and every single person on Forbes' 2024 Youngest Billionaires list inherited their wealth. They didn't create it.
It's not surprising because that's what oligarchies are like. When oligarchs have power, political power, they use their power to get more wealth and power. And this is getting rid of the estate tax is a great example of their fantasy.
Thanks so much for watching our video. If you have any ideas or pitches for what we should cover next, leave them in the comments below. And be sure to like and subscribe to get more Perfect Union in your feed.